The carbon market is becoming a big talking point amongst traders, and we've seen record highs on the EU carbon market, really. What's it based on, and what's it do, and how can we trade it in the future? Let's catch up now with the Director in Research at WisdomTree, that is Nitesh Shah. Nitesh, welcome. First of all, one of the big questions has to be, what is this carbon emission trading market?
Great question. So there are various carbon emission trading markets across the world. Now, just put into context, lots of governments across the world have signed up towards reducing their greenhouse gas emissions. And they're trying to achieve this in various ways. One is through taxation. Another one is through putting draconian limits on industries to produce carbon or greenhouse gas emissions. And the third major way is to make a tradable market in carbon allowances or carbon permits. That is the choice in terms of the European Union, in terms of where to focus its energy. Now, the European emission trading system works on the following basis. A cap is assigned on aggregate emissions that they want from industries covered. And then allowances are issued to companies to allow them to produce 1 ton of carbon. Those allowances are afterwards tradable. So companies who face relatively low costs in reducing their carbon footprint have a strong incentive to monetize on those allowances, reduce their own carbon footprint, sell those allowances on the secondary market, and companies who have relatively high costs in reducing their carbon are likely to be buyers of those allowances. Now, this allows for an efficient cut in emissions because the cap that I talked about is reducing every year. So a cap is being cut, but the distribution of the cut in emissions is really borne by the companies that face the lowest costs in reducing their emissions. Now, that's a regulatory scheme. There are regulated and unregulated schemes. The unregulated schemes are quite small, and those carbon markets essentially are an example of one is when a company maybe builds a forest of trees and sells credits on the back of that to companies who want to reduce their carbon footprint and say, look, I've bought a right to reducing 1 ton of my carbon because there's a forest that exists out there that's sucking up carbon from the atmosphere. So there's 2 very distinct markets out there.
Okay, well, let's take a look at this regulated market in some more detail then. So just clarify, if you can, where does this money go precisely then? If you are a company that is regulated, if you have to comply and you have these targets for your emission controls over the next 10 or 15, 20 years or so, as agreed by the international community, and you buy these carbon credits, if you like, the money, what can they be sure it goes towards?
Yeah, so in the system of the European Union, which is a mandatory system for the companies that are covered, they buy the allowances either on the auction or the secondary market, and at the end of the year, they surrender those allowances to the European Commission. So the money that's raised from this system goes into the European Commission's coffers. Now, some of the things that they spend it on are funds that promote cleaner energy usage. So hopefully that can reduce the carbon footprint of the EU even further. But also they go into redistribution funds as well. The European Union recognizes that the increase in cost of energy, for example, as a result of the emissions trading system, could often be borne by relatively poorer households. And they want to make sure that those poorer households aren't disadvantaged by this, and therefore provide a social redistribution fund as well.
One of the markets I know that WisdomTree holds is the WT CARP. It is represents this rise in prices that we've seen on the European carbon emissions market. First of all, is Europe far more developed than other markets around the world? We talk about Europe being the benchmark. Are there not other carbon markets of equal importance around the rest of the world?
Yeah, so the European Union's emissions trading system is the world's first and the largest. It started in 2005. So he developed this system from what was then just an academic idea, and has had the benefit of learning by doing, and therefore has matured to a much larger system than any other in the world. At the moment, the emission trading system, the carbon allowances traded on the European Union's emissions trading system represent around 88% of the world's emission trading systems. So it's just by far the largest, and therefore offers the most liquidity, and therefore possibly the best investment opportunities.
In amongst your research, is there any indication that gives you expectations that we could well see this market continue to climb from here? What would be the trigger to take it on further on up?
Yeah, that's a great question. So once again, putting back into context, we talked about the Paris Agreement, the 2-degree scenario, but the European Union has signed up for other things as well. It wants to become net neutral in terms of emissions by the year 2050. But as a medium-term stepping stone, they want to reduce greenhouse gas emissions by 55% by the year 2030 relative to 1990 levels. That became part of law in the second half of 2020. So to abide by its own laws, it needs to step its policy up to be able to meet those goals. In July of this year, they announced a legislative package labeled the Fit for 55 legislative package, and it's up for consultation. The couple of the things that they've announced within this is to more aggressively reduce the cap each year. They also want to introduce more sectors to this industry. Right now, it only covers the energy utilities, big industrial emitters like steel, aluminium, cement companies, and intra-EU aviation. They want to expand that to shipping, transportation, and buildings. Other things that they've mentioned is putting things like a carbon border tax in place, so to level the playing field. So the companies that exist in the European system don't have an incentive to leave the European Union once prices get too high, of operating in the European Union as carbon prices increase. But also those companies that were previously simply given out some allowances to stop them leaving the European Union will be subject to going through the auction process as well. So all this package altogether, we think is going to be very price positive for carbon, for EU ETS prices. So already the price of an allowance has risen to 65 euros per tonne from around 25 euros per tonne at the end of last year. And we think there's still room to go further if all the aspects of this legislative package get enacted.
Look, Nitesh, we'll have to leave it there, but thank you indeed for your explanation of this carbon emission trading market. That's Nitesh Shah, Director of Research at WisdomTree. For more videos from us here at IGTV, join us on Twitter at IGCom, Instagram, and subscribe to our YouTube channel.